Hi, everybody. Good afternoon, good evening, and good morning, wherever you are. Thank you very much for joining the Boardroom Club today. My name is Yossi Garmazi. I'm a first-year MBA student here at Cornell. I'm joined here by a good friend of mine, and also my classmates, Mr. Álvaro Jiménez. Álvaro?
Glad to be here, Yossi.
So today we have the pleasure of interviewing none other than Marc Jaffe, one of the prominent figures on Wall Street. Marc is the managing partner of Latham Watkins New York office. He represented issuers and underwriters in more than 450 equity and debt offerings, including more than 80 IPOs. Amongst them are Rivian, Spotify, Coinbase, Manchester United, and Peloton. Marc, it's a pleasure to have you joining us today.
Hey, I am excited to be here, Yossi. Thank you, and Álvaro as well.
So, Marc, the way we have been thinking about it, he asked you a couple of questions about your career, some of your market deals, and then going back to Q&A with questions submitted in advance of the audience. Sounds good?
Yeah, sounds fantastic. I'm intimidated because I see there's a professor on the phone, so I'm going to try really hard to get my answers correct.
Yeah, no, Risa Mish is our favorite, so thank you, Risa, for joining us today.
Will she be nice to me?
I guess, I mean, I cannot promise you anything.
Okay.
I got like B in that class, so who knows?
She's also a very brilliant attorney and lawyer, so you have to be careful what we say
Well,
here.
good. Then there's one on the phone.
Yeah, definitely. So, Marc, thank you again for joining us. So, we thought maybe to start by you telling us a bit about your journey to be an attorney, and specifically a capital market attorney at Latham.
Sure. So, just by way of background, hi everyone. Thank you for having me. I've been at Latham Watkins for almost about 30 and a half years, almost 31 years now. I went right from college. I went to Harvard. I graduated, went right to the University of Chicago for law school, and I went right to Latham Watkins. I've had no other jobs in my life. I'm totally uninteresting, but I've spent my entire professional career here. When I started here, I knew I'm from New York. I knew I wanted to come back to New York, and I had offers at lots of the big New York firms, the Skadden Arps and Davis Polk and Cleary, and Latham at the time was a very small office. The firm started in Los Angeles. There were about 50 lawyers in New York when I joined. But there was something about the spirit of the place, the way people linked arms and worked together and wanted to do something different that was really appealing to me. And 30 years later, we're 800 lawyers in New York City. We're the third largest law firm. Offices around the globe, like in Tel Aviv, where I was last week. And it's been an amazing ride. So when I started, we were really small. And what we did was a lot of high yield debt. We represented a firm, a bank called Drexel Burnham. I don't think any of you are alive. The professor was. And we were a high yield, a junk bond shop. I was lucky and got to work on the only IPO in the office at the time. It was an IPO for a company called Discount Auto Parts. You can guess what they sold. And I got to work on it from start to finish. And I thought, this is super cool. I went to the SEC in Washington and hand filed documents, and I went to the printer and stayed up really late and ate a lot of junk food. And I decided I was going to graduate law school, come back and be a capital markets lawyer. And that is what I've become. Now my career has, as a capital markets lawyer, has taken lots of twists and turns. I was very busy as a high yield lawyer for a number of years. I represented places like Bear Stearns and DLJ and Smith Barney. None of them exist anymore. So don't ever hang around me. I'm bad luck. All those amazing bankers went to places like Goldman and Jefferies and JP Morgan and B of A and started representing them. And then I really got into equity capital markets work. And as you noted, I've worked on probably 80 plus IPOs in the last 5 or 6 years across a variety of industries, everything from retail, the tech to, I have an old Manchester United football behind me. And I've mostly represented issuers in that regard, and it's been a ton of fun.
Yeah, so kind of going back to Latham. So Latham is very dominant in specifically in Israel in tech, in all over the world in the tech industry. What do you think made Latham so much dominant in this industry?
Yeah, so a little bit of our DNA. The firm started as a California firm, and we've been in the Bay Area, kind of the womb of high tech. We've been there for a long time, and we're in both San Francisco and Silicon Valley, and we're also a very forward-looking place, and we thought about what's around the corner, what's going to drive business, what's going to be important to our clients in areas like financial services or healthcare or even consumer. What's going to drive that? And tech is really at the root of all of that. So over time, we opened in Boston, another big tech hub, especially around the life science space. We have a big tech practice in London and Tel Aviv. Tel Aviv is probably it is the number one or two market every year for emerging companies, and it fit in with our global footprint so well. And we don't just cover it from what I do, capital raising and public company work, but we cover everything from two guys and a dog in a garage to my client Apple. We cover them on IP, litigation, privacy, cyber, all of the things. We don't do employment law. We don't lease real estate for our clients, but we wanted to be a one-stop partner to our clients across the globe in this space, and we're always working to get better at it.
It's very insightful and it looks very promising indeed for Latham. Kind of like going specifically to the IPO sphere. Can you tell us a bit what is IPO is all about in terms of the storytelling of it? And later on, we want like to delve a little bit more about a few of your IPOs, market deals along the year.
Yeah, and I know you're going to have other really esteemed guests as part of this cool series of bankers like Nati, I saw on earlier, and CEOs and CFOs and VC investors and everyone in an IPO. And one of the reasons I really like it really has to link arms and work together and bring their expertise to a transaction. And for me, there's no such thing as a hostile IPO. Everybody works together, and where there is a founder with a vision, and that vision is their baby and part of their dream, working with them to access the capital markets in furtherance of that dream, to me, there's a great high that comes from that, and linking arms with people who bring their expertise to the table in order to help a founder or a private equity firm achieve that goal is really at the core of the IPO process.
Yeah, definitely. And can you take us a little bit deeper into the Rivian IPO story? Take us behind the scene of what's going on in these days?
Sure. And I'll note before I talk about Rivian, why do people go public? Well, they go public to raise capital. That they have a business plan and they're focused on growth, and capital is key to that. They go public because now they have currency, the stock, to use to go out and pursue acquisitions. They go up public for the branding value of it. Ringing the bell at the New York Stock Exchange puts your company on the map. Now that's a little bit of a moment in time event, but there is a huge market vote of confidence around companies that go public. And then also they go public because they attract the best talent by having equity compensation that, cross your fingers, becomes valuable over time. Rivian fit a lot of those buckets. So I worked on the Rivian transaction with a partner of mine who runs our Bay Area offices. It was a perfect combination of sort of Silicon Valley, deep tech, a lot of the consumer deals that I've worked on, and the need to tell a story. You know, everyone knew what an electric vehicle was. Everyone had in the back of their mind that this was the future of the automobile industry. Rivian has a real ESG, environmentally focused mission, and it was a hot market when Rivian went public. And it was a story that was really quickly gobbled up by the buy side. Now, this was a company who had a really charismatic founder. He's a genius. He believes in the mission. It had a very cool looking product, and you can touch and feel it and see it. They had big backers behind it, Ford, Amazon. It had all of the right ingredients. What it didn't have was a track record of producing cars in volume to meet market demand. So you had to tell a story that this was a model, a management team that got it, that there was a path to ramping up so that they could roll cars off the production line in a timely fashion. You could tell a story, about unicorns and rainbows all day long, but ultimately investors want to know that the model you're selling them is operationally possible, and that was the story of Rivian. And it took a lot of work crafting that story, and that's true whether it's electric pickup trucks or Warby Parker, a eyewear manufacturer, or a Manchester United who, U.S. buy side folks had no idea how intensely valuable and popular Premier League football was. Telling that story is so important. I've worked on a lot of deals for restaurant companies, usually quick serve, and so I'm thinking I worked on the Bojangles IPO. I don't know if you all know what Bojangles is. They make fried chicken, and by the way, delicious fried chicken. And at the time they went public, they didn't have any stores in the big markets where a lot of the buyers of stock are, New York, Boston, and they walked around with like fresh biscuits and fried chicken to roadshow meetings so that investors could get the story. So it's telling the story, it's delivering it, it's familiarizing the investment community with why there's such enthusiasm around a story, why growth ought to be real. I'll tell you an area where I don't spend a lot of time, but my partners do, is life science. That's a tough story to tell because that's really deep. It's not just FDA approvals. There are people on the buy side who actually know how the molecules work together, and that is unlike almost every other vertical. Life science is a bit of a different story.
Hey, and you touch a little bit on Manchester United. I just received a ton of messages to touch on it. So kind of delving a little bit deeper into this IPO. So for those who don't know, Manchester went public in 2012. And our question is, Mark, how difficult was it to take an English soccer team and take it as public in the US, the kind of the storytelling part of it, as a football team that's going public? Or is it a brand that's going public?
Yeah, that's a great question. It had a lot of hurdles for a lot of reasons. It was an incredibly well-known, probably the most iconic sports team on a global basis, but largely unknown to the US market. They worked with a law firm, Latham Watkins, that was with a bunch of folks sitting in New York. The lead investment bank was Jefferies, which at the time was a very US institution. And they thought for a long time, where should we list this thing? And the truth is that we prepared a filing for each of the US, London, and Singapore, not knowing where the best place to list was. Ultimately, despite the global awareness of this brand, the money's here. And I still think in a lot of ways, the deepest pool of investors is in the US. And the decision was made to list in the US and to fight that uphill battle of explaining why, a United Man City derby gets more global viewers than the Super Bowl. And the number of online followers of Man U dwarfs almost anything in the world. The global if you walk through an airport in Seoul, Korea, or Tokyo, Japan, I promise you can buy a Man U jersey. You may not be able to find a Los Angeles Dodgers or New York Yankees jersey. The global reach was immense, and it wasn't about the tushies. Is that an MBA word? The butts in the seat, because there are only 80,000 seats at Old Trafford. You can only sell so many tickets. It was about the licensing, the marketing, putting Man U on like Vespa scooters in Vietnam, or credit cards in China. The brand was so powerful, and the growth, the opportunities for growth was so immense, proven year after year that it was a good story to tell. You might have all seen that we just sold a piece of Man U to Sir Jim Ratcliffe, so bringing a little bit of Man U back to the UK. The owners, and the voting control belongs with an American family.
Yeah, amazing story. And maybe a follow-up question is that, I mean, if you look at the IPO of Manchester United, so they were priced a little bit below, like in the bottom of the price range. But if you take the one first year as a whole, they actually did good. So what do you think led to this change of perceptions of Manchester as a public company?
Yeah, my clients care a lot about where their IPO prices and where it prices vis-a-vis the range. When they interview investment banks to figure out who's the best bank to work with, they're often fooled into thinking, well, whoever tells me that we have the highest valuation, that's the best bank. That is a very short-sighted way to look at, in my view, at being a public company. It is not about a moment in time. It is about a journey that, if done well, lasts a long number of years, where you prove out to the investing market who you are, what your value is. People get fixated. We go down to the New York Stock Exchange, the bell rings, and everyone's looking to see which way it's trading. And it's amazing if it trades up, particularly amazing for the people who flip their stock on day one. But long term, you're looking for steady growth in the market, investor acceptance, and then ultimately, the markets are efficient. I don't know if you guys have all taken sort of like law and economics, and the stock ought to trade at the right place over time. So it takes a lot to convince these folks who, go from living in their garage to having, billions of dollars in the bank, that it's not about day one. And I get the attraction of day one.
Definitely, to take a sports team Manchester public seems very exciting, and maybe we want now to kind of like shake a little bit the things and go to another IPO, kind of. It's direct listing. So, Mark, can you tell us about how, in terms of operational level, how the direct listing is different from, let's say, a traditional IPO?
Yeah, that's a great question, Yossi. So I think you all probably know Spotify was the first meaningful direct listing. There had been some smaller ones that really didn't take market notice, but Spotify was the first sizable one, and it didn't fit squarely. The execution of that direct listing didn't fit squarely within the rules that would otherwise govern an IPO. The CFO of Spotify was a guy named Barry McCarthy, Barry had been the CFO of Netflix. He's now the CEO of my client Peloton. He is an incredibly smart, dynamic uh, uh, person who understands capital markets, but also is a disruptor. And that's you're in those tech businesses, you should be. And he said, I don't want to do it the same way everyone has done it. Spotify had been their shares had been widely distributed to employees, early investors. There was a secondary market. There were thousands of people already holding shares in Spotify, and they decided that they were going to push the envelope and go public through a direct listing. The 90% of that process is exactly the same as a traditional IPO. You have a disclosure document, you tell the story, you have audited financial statements. The only thing that's different is meaningfully different are the mechanics of executing that first trade. Some of the esoteric legal things about when you could publish projections and when could research analysts start, and some of the roadshow mechanics. And that's the sort of thing we went down to the SEC. We sat with the head of the division of corporate finance. We sat down with the head of trading and markets. We got no action letters. We sort of greased the skids for a smooth transaction, and Spotify went off. And it was an incredible moment to be able to put all that effort into doing something different. There haven't been a ton after. I did work on the Warby Parker. I always point to my reading glasses because I got these as a deal gift. We there haven't been a ton. There aren't to really be a good candidate for a direct listing. You have to not need primary proceeds. We're working on a way to raise primary in a direct listing and hasn't been tested yet. You have to have a security that's held by enough people that on day one it can start trading and have an efficient market. And you have to be a little bit patient. So we've not seen a lot of take up on that.
Yeah, maybe you touch a little bit also on the equity capital market. So it's always obviously in the last year, maybe in the last 6 months, it's very fluctuating with all the like interest rates. Will they go up? Will they go down? How do you see the equity capital market going on in the next year, and how do you guide your clients?
Yossi, I wish I knew. So I worked on the IPO of Birkenstock, and the New York Post loves writing really like colorful headlines. And so Birkenstock went public, traded down, and the Post wrote, Birkenstock stubs its toe, Birkenstock gets off on the wrong foot. Not a ton, although save for Reddit, we'll see how that goes. And my partners represented Reddit. So everyone here was pretty psyched about that. There haven't been a ton, Instacart, Birkenstock, ARM. There haven't been a ton that have gone out, traded up sufficiently that the market has said, okay, people are being sane about valuation. There's efficiency in the market. We're ready to go. The market is wide open. It will happen. Our pipeline of companies that are ready to go public, I don't think I've ever seen a pipeline this big. Just at Latham, it's in the hundreds. We have pretty good market share, but we don't touch all. There are a lot of companies that are ready to go out. What are people waiting for? Look, I think the US election, I always hate when people blame externalities on the lack of market interest, but this is a tricky election. I've heard a lot of equity capital markets people say, sort of doesn't matter who wins. It just matters that it's over. The market went up under the previous president. The market is, if you have a 401k or if you guys are investing, it's doing pretty well under the current president. Folks aren't ready to buy new issues as readily because they're not sure where that valuation ought to be for a new issue. We also think this election, there's gonna be a lot of yelling about China. That's not from both sides. That's probably not good for the market. So Q1 of 25. I think you guys should graduate, all get jobs, and be ready for explosive business.
Yeah, I mean, I hope for, at least. So, can I maybe shift the things again? So, we want to touch a little bit more about the Israeli side. So, obviously, Latham is maybe like 90% of all the tech businesses in Israel. So, maybe a general question as a beginning. Israel is known as a startup nation and later on as a scale-up nation. Where do you think it goes next?
Yeah, look, I mean, there is zero doubt that the technology that comes out of Israel is the best in the world. There are areas like cyber, which it's hard to find a market that rivals Israel. There are even, I just worked on, I have a client called Il Maquillage, or they're oddity now. It's AI-driven cosmetics. I have worked with Lemonade, which is AI-driven insurance, and Fiverr, and you name the space, Israeli tech, for lots of reasons, including the fact that Israelis all go through military service. Lots of them work in cyber units. They make lifelong friendships and come out and just have this incredible work ethic and vision. It's unique. I mean, that is why it's startup nation in a lot of ways. I think the big challenge was proving that they could scale up. And Israel's a small country. There are only so many people who can be programmers and coders, and but we've seen Israeli companies be really smart about scaling up by moving into Eastern Europe, moving into Asia, certainly moving to the United States. At the core of so many of these companies are still these visionaries and these tech geniuses who are sitting in Tel Aviv.
Yeah, and was it any different to work with, say, Israeli entrepreneurs than other entrepreneurs in terms of maybe the behavior or how they react or like change things? I know they're
Yes, I'm going to be very delicate, Yossi, because I know you're Israeli.
yeah, no, you should like
Israelis are they're sabras, tough on the outside and sweet on the inside. They're look, I mean, every country has a different cultural approach. I love working with Israeli founders and CFOs, and because they get right to the heart of them, and bankers, they get right to the heart of the matter. They tell you exactly what they're thinking. They listen to you, but if they disagree with you, they tell you. And sure, that a lot of what I do, I think I got the law down okay, but a lot of what I do is sort of EQ driven. And I think that's true for anything any of you will do. Relating to people and is so important. And you have to understand that Israelis are different from New Yorkers, are different from Germans, and sort of understanding what drives them because of where they came from and where they want to go matters a lot. But one thing we are seeing is a lot of Israeli companies really moving heavily to the U.S. Never giving up their Israeli roots, but whether it's Lemonade, which is a Delaware incorporated insurance company, or a company like Kaltura, which at the heart was Israeli but had lots of team members and talent in the U.S. It's just natural for such a small country to do that.
Yeah, and maybe you touch a little bit about Monday, Fiverr, Lemonade, and a bunch of others that you represented along the years. Can you tell us maybe a story when an IPO was stuck, maybe postponed, and what did you do different in order to kind of launch the IPO back or maybe launch the company back to track?
Yeah, sure. That happens all the time. Markets go like this, and timing it is incredibly tough. You start the IPO process 4 to 6 months before you're actually going to go and sell the security. So guessing when the window is going to be open is near impossible. And so I'm thinking, Lemonade is a good example. Kaltura was an example. What you want to do is be ready when the window is there, when the market's open for new issuances. And sometimes it's not. And then you put your pencils down and you go back and you operate and you continue the dialogue with the SEC, because the SEC doesn't actually bless you going public until the very end. But what's so important, and what's so important whether you start and stop or whether it runs out the door, is that management continually focuses on operating. The IPO can become such a distraction and sideshow that if the CEO and the CFO take their eye off the ball, all the great things they've been doing to get the company IPO ready, to take their eye off the ball and to stumble out of the gate is the biggest mistake that I see people make.
Yeah, so Mark, this was very insightful for me just to listen to you, and I bet for all of the people in the call. But I know that Álvaro has a bunch of other questions that you want to ask you. So thank you very much. And Álvaro, the floor is yours.
Álvaro, be nice to me.
I'm sorry, Mark, but that's not me. So these are the hard questions. Going back to the markets, you did talk about it. You did mention we've seen a slowdown, but in this white collar recession that some people call, which is not great for grad students, you have mentioned that there's a huge pipeline for IPOs already in Latham. And do you think there's a particular sector that is particularly strong, or just at that point in the wave that's going to come that you think is going to crush it?
Yeah. I will tell you, I don't know if any of you are in law school. We are continuing to Nathaniel Lavie is. We are continuing to, we're going to have a record size summer and first year associate class at Latham coming up. We are bullish on the market. We're bullish on M&A activity and equity capital markets activity. And we think that's going to be across the board. Where do I see particular strengths? Where do I see a lot of attention? Tech, fintech is huge. Insurtech, life sciences remains an incredibly important area. All of those things will continue to see huge growth.
Yeah. So basically, law school students that are on this call, you guys are solid. But what would you tell the other MBA students that we're here that are focusing on banking and consulting?
Yeah. Look, I think banks in general, I've been doing this 30 years and most of my clients and my best friends are bankers. Banks are generally public companies that report to shareholders and that do it on a quarterly basis. And so they may be a little bit more up and down with hiring goals or outlook, whereas law firms are private partnerships. I still think that major players in the investment banking space are going to be huge consumers of talent, are going to need. My daughter was an investment banking analyst. I know she never went home. I think there are going to be ups and downs like there are all the time in the market. But if I were in business school and I was interested in it, you should only do things you're interested in. I think investment banking in particular is a great career path. I know less about consulting, so I will not comment. But I also think investing, private capital, whether it's venture investing or every other flavor of private capital we're seeing flourishing today, whether on the equity or the debt side, will become important, increasingly important.
And now going back to our lawyer friends, what is the difference between a good lawyer and a great lawyer? What do you think is the differential to make somebody be very successful?
Yeah, again, I think EQ is so important. There's certain areas of the law that are incredibly rule driven, actually mine is one. I'm looking over at the giant binders of the securities code over there. But tax, uh, 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 capital markets, but in any area, EQ is so important. Listening to your client, knowing where they want to be at the end of the day, and being their partner. My best clients have been my best friends, or people have become my friends because I share their journey. And tell you what, that makes me want to come to work every day, and gets me juice to roll up my sleeves and be creative, and to find solutions that'll help people achieve their business goals.
Right. And now moving into a little bit more of the person, Marc Jaffe, what do you do outside of work? Because I'm sure that you must have a lot, but you must also sleep and do other fun stuff. So what do you do?
What do I do? So I have 3 kids. Um, Fortunately, they are all out of the house. My daughter's going to law school next year. Um, my middle guy works in real estate in the city, and I have one still in college. So they're sort of out of the house, but they keep coming back, which we're going to change the locks on the door. But we all ski. We love skiing. My wife and I are late in life golfers. She is way better than I am, which is annoying. I think she's chiller, and that helps. And I live in New York, so I'm a huge Ranger fan. You can probably see my Yankee uniforms on the wall. Um, uh, Go to shows and concerts and hang out with my friends. I like drinking a lot too.
I hope it's good alcohol and
I try, yeah.
all right.
It's all
Okay.
a rock.
All right. Very good. So and one last question for me before I give it to Jacob, who's gonna close. Have you read any interesting book lately? What would you recommend?
So I am a big, excuse me, I'm all choked up. No, I am a big fan of the author Eric Larson. So Devil in the White City and The Splendid and the Vile's the one I just read about Churchill, which I thought was amazing. He's a new one coming out about the Civil War. I like historical fiction a lot.
Very interesting. Thank you so much, Marc. I'm gonna give it to Jacob.
Yeah, thanks, Álvaro. Hi, Mike. Thank you for coming for this occasion. Mine is the last one.
Thank all of you guys for wearing your best sports coats. I would have gotten dressed up. Sorry.
Blame Yossi for everything. He's the one who taught us how to dress. But just to wrap up, for most of us, MBA students, we are more interested in negotiations and deals. What legal subject would you recommend, us to help us, especially when we start working on deals and negotiations?
All of these are great questions. So I didn't go to business school. My wife did. And law school, I think, is very different. And I loved law school because it taught me how to think critically, and it taught me how to write better, and it taught me how to think deeper about an issue. What it didn't teach me, maybe I wasn't paying close enough attention, were the nuts and bolts of what it is to be a lawyer. I didn't walk in here on day one and have the 33 or 34 Act memorized. And no one walks into the job and knows, I remember the first trust indenture I wrote for a debt security. It took me like 9 days. I thought I was going to be fired. No one learns that. And maybe it's different in business school again. What you do learn is how to interact with other people, how to be part of a team, how to think critically about things. And I would say whatever you do, and I say this to Latham first years all the time, be in the office, ask questions, raise your hand. All of these, whether it's banking or consulting or the law, they're driven by mentorship. I mean, these are designed to be sort of apprentice type relationships, and the partners and the senior folks, wherever you're going to end up working, that's part of that brings them joy to do that. It certainly does for me. And the worst thing is when the people who are coming right out of law school don't knock on my door, or sit in their office with their door closed and wait for the phone call. I love people who raise their hand and say, hey, I'm really interested in what you're doing. And I would love to be on your next transaction. And then they sit in your office and they watch how you do it and they learn. And it's gotten a little bit harder post-COVID. I was noting before that kind of empty here on Fridays. But taking responsibility for your career, being in, asking questions, raising your hand and volunteer to do stuff that maybe you've never done before. That's the advice I give to anyone, whatever they do.
Well, thank you very much. I think that's it.
Oh, and wear a super cool blazer. But you guys already got that.
So that's...
Mark, by the way, do you play the guitar? I've seen a guitar on the background.
Oh, yeah. Do I play the guitar? I am able to play a very limited number of songs. I had tried to play in high school and I tried to play in college. And then during COVID, I thought, all right, I'm gonna have time. I'm gonna be in my basement office. I got an acoustic guitar, which, by the way, really hurts your fingers if you play the guitar, and or maybe I'm sensitive. So for the office, and it makes a lot of noise. I bought this electric guitar, so I could practice chords and not bother all the people near me. Do I play the guitar? Not really.
Okay, so I think.
But if you want to form a band, Yossi, I'll learn.
Yeah, it's me, you, and Professor Ritamish as well. So
Jacob looks like a lead singer.
Yeah, actually she is. So
Mark, I know that Professor Mish was very happy to hear about how law school prepares you for critical thinking, and she's one of the star professors that we have here at Cornell. Professor, if you'd like to say anything to Mark.
Well, I have to thank him for that shout out. I hope everyone caught that. Not once, but twice. The reference to critical thinking, so important. Mark, so thank you so much for being here and sharing your expertise. Thanks.
Yeah, no worries.
So Mark, just like a quick note, you mentioned the band of me, you, and Risa. So just for you to know, that Jacob actually sang with the CEO of Kaltura, Ronnie Cutiel, the Hakuna Matata song, back in like the previous call. So
I know Ron well. He's a fabulous singer. I got nothing. Yeah. I heard Nadi Ganor is an amazing singer. So when you have him on, I encourage.
No, actually, it was like just before you.
Oh shoot! All right. Well, whoever's next.
The next is the CEO of JFO, Shlomi Ben Chaim.
Get worked on that IPO too. Another fabulous singer.
Okay. So Mark, thank you very much. We are privileged to have you join us. Really, we didn't expect someone of your stature just like to share.
Oh, cut it out. I'm 5'6". I am 5'6". I have no stature at all.
Yeah, so I'm 5'4", 5'5". So...
Are you really? Oh my God, Yossi, you're my man.
Yeah, so we are bros now. So thank you very much again, Mark. It's been a pleasure for all of us, and for everybody else. Join us for, I think it's like in 45 minutes, the call with Shlomi Ben Chaim, the CEO and co-founder of JFrog. So stay tuned, everybody, and Mark, pleasure. Thank you.
You got it. Thank you guys so much. Take care.
Thank you. Bye.